think we're going to start to see 15, 20-year highs in consumer confidence by the summer.
Will that translate into spending?
It's, in fact, very highly correlated not only with consumer spending, it's actually correlated highly with S&P PE ratio. We really don't know, because December retail sales was disappointing, and December wages as well. I wonder if it's an anomaly. Like, is it going to be something that when we see the January data or we stack November, December, it turns out those 2 months were good. So,
Morgan Stanley lost the quarter, but still won the year. They're a little bit like the Seattle Seahawks. Tough conditions, made a few mistakes, but they still won the game. Fourth quarter was their first earnings miss in 10 quarters. They had bad trading. The revenues fell short. But for the year, Morgan Stanley had the best revenue growth for each investment banking, equities, and fixed income. And per your earlier remarks on the panel, the bank results so far are lousy in the fourth quarter, but we would not extrapolate fourth quarter results. And for Morgan Stanley, we expect revenues in 2015 to be on average 13% higher than where they were in the fourth quarter.
Let's keep in mind the impact of the two hardest hit sectors, energy and financials. If you combine them, they're about 25% of the S&P. It's really, really tough for the market to get any forward momentum.
You're making my point. You're making my point for me.
But let me take it back around.
Okay.
Each of those sectors are down 5% plus. If there's any recovery in either of them, which is as possible as anything else happening, you look at how the rest of the market has held up throughout the travails of all the global currency stuff, all the commodity stuff, and you really aren't looking at that poor of a picture. So I think the question is, will investors get through the next 80% of the S&P 500's earnings reports